Warm welcome, everyone. Good morning, good afternoon, good evening. Thank you for joining this webinar on strengthening financial resilience for migrants with insights from Bangladesh, Nepal, and United Arab Emirates. Before we start, I will briefly share with you some logistical notes. So the webinar is going to last around 1 hour and 30 minutes. It is being recorded, and we will share the recording with you in the days after the webinar. Alongside the slide deck. In case you have any questions, please do not hesitate to add them to the Q&A section at the bottom of your screen and specify to whom your question is addressed, and we will answer them at the end of the webinar. So now let me introduce to you my dear colleague, Premises Mukherjee, who is our Senior Financial Sector Specialist. Over to you, Premises.
Thank you, Justine. So we'll go through an introduction to UNCDFs and our focus on financial resilience, followed by our approach and insights presentation on Bangladesh, UAE, and Nepal by our partner MSC's Anish Gulati. And then we have an excellent panel coming from these three countries and also from three different kinds of institutions, very well versed with the topic. Shariful Islam Hassan from BRAC, Luca Peleno from ILO, and Pravinji from IME's Nepal. And followed by that, we'll have a question answer session. The panel would be facilitated by Mercy as well as a question answer session, and then we'll see. So we are, for the sake of smoothness, we are keeping the question answer later, but throughout the presentation, anytime if you see that you have a question, you can, as Justin has mentioned, you can type in the question. So with that, I'll start. Now, at UNCDF, we aim to contribute to the inclusive digital economies, supporting women and men beneficiaries in the migration value chain towards economic inclusion, financial health, and reduced inequality with strong focus on promoting gender equality. The financial resilience for migrants, nearly 300 million migrants and their families, is becoming a development priority due to increasing global migration trends, food security issues, and climate-related shocks. Although social security for migrants is essential to achieve at least 5 of the 17 Sustainable Development Goals, less than 3% of the migrants from low-income countries have access to portable social security schemes. Post-COVID-19, there is a greater need for scalable financial services that contribute to the financial resilience of migrants and their families, including women migrants who comprise almost half of the migrants globally. Now, financial volatility in the low-income segment is often a function of two kinds of risks: idiosyncratic risk and systemic risk. Idiosyncratic shocks affect only an individual or a family unit, for example, death, disability, unemployment, illness, etc. On the other hand, systemic shocks impact a larger group of families, as we know: natural disasters, economic downturns, mass unemployment, pandemic-related illness, etc. The financial resilience of the migrants cannot be addressed without a comprehensive understanding of these shocks, these risks, the portfolio of them, and a management mechanism. The other aspect of the risk is the relative frequency and impact on the household. The demand research survey UNCDF conducted across 3,000 remittance users across 6 countries, 1 in every 3 remittance receivers have mentioned that using remittance, the remittance is used for health expenses, indicating a diversion of remittance towards managing this portfolio of risks from productive or consumption purposes. In absence of adequate risk transfer mechanisms, the economic impact of the shock is typically adjusted through a portfolio of ex-ante income shaping or ex-post consumption smoothing strategies. However, these strategies are often imperfect and result in suboptimal outcome regarding the financial resilience of the low-income migrants. Now, with that kind of an approach, what we need to look at is a market development theory where policy and regulation, including regulators and policymakers, need to enable innovative, migrant-centric, gender-responsive, and portable social security and digital financial services. Financial service providers in the market need to align with those regulations and policies to design or deliver scalable and commercially viable uh, social protection products which are gender responsive. A role of cross-border portability uh, and in cross-border interoperable payment mechanisms are increasingly becoming important to deliver those services, and ultimately keeping the migrants at the center. It is essential that the families are aware of and appreciate the role of financial services and social protection measures that contribute to their financial resilience, and they prefer, choose, and use those services. Now, the financial resilience of migrants often include a host of institutions and instruments, each contributing their important and unique role. While social security institutions, policymakers, and regulators may create adequate foundation for such services, the delivery is often a result of a complex and often interrelated network of several other institutions, including insurance and reinsurance companies, both global and country-based, pension fund managers, insurtechs and fintechs, digital financial service players, banks, remittance service providers, and even mobile network operators and post offices. It also includes instruments including payment mediums, both in the country as well as cross-border payment mediums, basic financial services as well as specific technical functions, including actuarial expertise, data analytics, risk management, liquidity management, claims management, long-term fund management, etc. Finally, the services need to reach the migrants and the families through last mile delivery mechanisms that include, apart from bank branches and conventional social security channels, the digital financial services like agent banking, mobile money, or microfinance institution. A comprehensive financial resilience ecosystem, therefore, can function only when all these institutions and instruments are aligned through a synergistic incentive aligned system. It is therefore necessary to assess the readiness and efficiency of all possible value chain members to assess the comprehensiveness of migrant financial resilience in a country. In this particular case, what we have looked at, and in a couple of months, you will have access to this three country study specifically, where the readiness of migrant financial resilience ecosystem of each country is assessed at these three levels: ecosystem, institution, and products. The ecosystem comprises of the regulatory and policy landscape, including the clarity and regulatory environment, a well-developed social security and financial inclusion mechanisms, clarifying the role of the players that we have just mentioned, and the inclusiveness in the formal financial ecosystem. But it also includes innovation stimulus provided by the policymakers and regulators in terms of a formal remittance market, digital financial service market, uh, development and promotion of innovation by different financial institutions by the regulators, robust and active industry associations, and availability of capital for the financial institutions to innovate. At an innovation level, we look at the research and development and business model innovation trends of the different institutions, especially focusing on insurance and pension industry, especially for migrants, focus of the industry on new delivery channels, focus on gendered aspect of insurance and pension for migrants. As well as this includes organizational capacity and structure and process, capital and partnership network in terms of the competitiveness of the insurance and pension market, yielding to digital processes and payments, partnerships, and leveraging digital financial distribution models. And finally, the products that are available to the migrants. And in products, we also include the social security schemes, including the first pillar, second pillar, or third pillar pension products, insurance products, scale and viability of the migrant insured mandatory or co-contributory voluntary migrant insurance products, the existence of bundled financial products, and how those are delivered through different distribution mechanisms, marketing, and communication mechanisms. In the following slides, and as I hand it over to our partner MSC, who have done this study on the three countries, all the Bangladesh, Nepal, and UAE's trend on these three markets are assessed. Over to you, Anish.
Thank you, Premashish. So we start with the migration overview. We'll follow a common chronology starting with Bangladesh, then Nepal, and at the end UAE for all this slide and subsequent slides. The migration from Bangladesh has steadily increased in recent years, as you can see in the graph. More than 95% of the migrants are concentrated in top 5 destination countries. The process of migration mainly relies on closely knit community networks that not only impact the migration pattern, but are also critical to migrants' choice of financial services. The social security programs and other initiatives towards migrant financial resilience and need to harness the potential of these networks to encourage formal financial engagements. With more than 3/4 of the migrants falling into category of unskilled or semi-skilled labor, also dictates the sector in which they are employed in the host country also uh, and also restricts their access to social protection in the host country. This clearly emphasizes the need for enhanced educational and vocational training in addition to the financial literacy that is being provided to them. These trainings are more important for women as 4 out of 5 women migrants work in domestic sector and are not covered by the host country's migrant social purview. Talking about the remittances, as we've seen that the remittances have grown phenomenally in last decade or so. However, the remittance from these migrants often serve the unproductive purposes or managing high frequency, low impact risks, which limits the family's capability to pay for insurance premiums or pension contributions. Apart from the need to reduce the cost of migration, which otherwise eats into a significant part of the migrant's income, the rise in digital remittance opens the avenue for innovative and inclusive financial services. Lastly, addressing the gender disparity in access to digital financial services calls for a tailored and gender-responsive financial products and social security measures for the migrants of Bangladesh. Moving on to Nepal. Although the climate risks and other economic vulnerabilities of the migrant and their families in Nepal are very high, a significant percentage of these families are left out of formal migrant social service protection due to the irregular migration that happens to the neighboring countries. Owing to young median age of migrants, the Nepali migrants present a demographic boon to insurance and pension sector, as they promise for a lower industry risk and extended period for pension contribution. However, these migrants, again, especially women, are often engaged in low-skilled or informal jobs, which restricts their access to social security and formal financial avenues, even in the country of destination. Enhancing skill set and financial literacy is hence pivotal for these individuals to secure better employment and comprehend available financial and social security offerings. To reduce the debt of migrants, the Nepal government started the free visa, free ticket policy. However, our study found out that 9 out of 10 migrants from Nepal still have to avail some form of credit to cover the migration cost. Repaying these debts reduces the scope of the family to use the remittance to fund their investments in financial resilience instruments. And they end up paying the loan EMIs. Still, the digital remittance services stand as powerful lever for financial inclusion, given the substantial role the remittances have played in Nepal's socio-economic upliftment. Hence, policymakers and financial entities must address the digital divide and gender disparity in financial decision-making to ensure that the remittances are able to bolster the financial resilience and create a balanced economic growth, particularly among the women migrants from Nepal. Moving on to UAE from Nepal. UAE is, for our study, UAE is a host country, and hence the dynamics would change accordingly. Aligned with UAE's transition towards a diversified and knowledge-driven economy over the time, the migrant workforce in UAE has transformed from a blue-collar dominant to a skilled pool labor. This transition of moving beyond the traditional petrochemical or construction services also requires policies that enhance the financial security and healthcare facilities for migrants. Reforms such as adjustments to the kafala systems are such positive steps towards understanding and addressing the needs of migrants, which are essential for the nation's ongoing economic evolution. The COVID-19 pandemic exposed the gaps in social protection for migrants, especially those who fall into the category of temporary, unorganized, or work in the domestic roles. Additionally, with majority of remittance from UAE to origin countries still occurring through the traditional cash-based methods, there exists a significant potential to expand the digital remittance services. Doing so could also not only lower the cost of remittance, but also facilitate the access to remittance-linked insurance and pension products, which would eventually lead to improvement of the migrants' access to formal financial safety nets and improve their resilience. Yeah. Thanks, Francis. So moving on to the migrant focused financial landscape in these countries, it's important to understand the ecosystem and the institutions impacting the financial resilience of migrants in these three countries. Starting with Bangladesh, the National Security Scheme or the National Financial Inclusion Strategy of Bangladesh, along with the Ministry of Finance and the Ministry of Expatriate Welfare and Overseas Employment, aims to integrate the migrants into government endorsed insurance and universal pension schemes. This can be testified by the implementation of migrant-focused Prabashi Kalyan Bank and a successful mandatory insurance, and the recently launched universal pension scheme, which has a dedicated migrant or a Prabashi specific version. Despite the established need, the capacity constraint at the regulators end, including the banking regulator, insurance regulator, and pension and microfinance regulator, has hindered the pace of innovation and extensive outreach. Bangladesh's evolving insurance and pension regulatory framework faces challenges from the capacity limits and legacy issues. Addressing these regulatory gaps can help to utilize the nation's expanding agent network and the mobile financial services network to promote the innovative financial solutions. The DFS or the Digital Financial Services footprints through a network of 20,000 plus banking and 1.6 million mobile financial services agents can provide opportunity for delivering financial solutions to improve the migrant financial resilience. Similarly, collaborations with international remittance providers and international insurance and reinsurance companies can also be beneficial for Bangladesh. The insurance industry also awaits clarity and flexibility, especially when it comes to the digital distribution of insurance products through the bancassurance channel. A nudge from regulators which can incentivize innovation and inherent understanding of a migrant demographic can be done. Addressing the trust deficit, enhancing financial literacy, and promoting digital delivery mechanisms are pivotal in this case. Additionally, to improve the overall claim ratio of the insurance industry and also for the mandatory migrant insurance product can boost clients' confidence in insurance and overall will lead to industry level maturity in Bangladesh. Now moving to Nepal, the current social security system is being managed by multiple ministries, the key of them being Ministry of Labor, Employment and Social Security, MOLESS, which manages the mandatory migrant insurance, Foreign Employment Welfare Fund, and the Social Security Fund. The Ministry of Finance, which manages the Citizen Investment Trust and the Employee Provident Fund. And at last, the Ministry of Federal Affairs and General Administration, which takes care of the zero pillar social security allowances. Now, as we've seen that there is a dispersed network of social security provision. A harmonization is necessary to prevent confusion and optimize the fiscal expenditure. Nepal's prosperous Nepal, happy Nepalese vision can be benefited from an effective cross-ministerial coordination, particularly in integrating migrants into financial and healthcare security frameworks. The regulatory flexibility from the insurance regulator, Nepal Insurance Authority, can also foster innovative product development and distribution of migrant insurance and eventually promoting the inclusivity. The presence of active fintech sector supported by conducive policies and private incubators may hold the key for financial resilience solution for migrants. The market competitiveness in insurance and pension industry can be improved by easing the entry barriers and establishing operational clarity. In 2023, the Nepal Insurance Authority allowed the establishment of micro-insurance entities, and that can be a leverage to provide cross-border insurance services to low-income migrant segments. Similarly, leveraging on the Nepal's DFS infrastructure, particularly mobile banking, can revolutionize the access and diversity in inclusive insurance offerings. Insurers need to boost their technical capacities to develop innovative and scalable solutions which focus on disaster-prone and migrant demographics. Collaborations with diverse stakeholders across the ecosystems could enrich product offerings and scale. Additionally, incorporating migrants into existing social security networks and utilizing the unconventional distribution channel in Nepal can expedite the financial inclusion. As we move now to the UAE, the regulatory environment for migrant insurance and pension in UAE, like that in Bangladesh and Nepal, can benefit from the harmonization across regulators. The nation's fintech strength can be untapped to develop digital solution and migrant financial services. It would be enhanced. It would require enhanced collaboration among the insurers, fintech, and the financial service providers. While the recent laws do enhance the migrant worker protection, still some gaps persist, especially for the low-income individuals. Expanding mandatory insurance and ensuring benefit of portability is a critical factor to provide a comprehensive social protection. Such moves, which can cater to both skilled as well as blue-collar workers, would bolster UAE's image as a work destination and stabilize the insurance market also. Utilizing the digital remittance platform and the wage protection system can further enhance the scope of financial services for migrants. Successful implementation of innovative end-of-retirement schemes like Dubai Employee Workplace Savings or DUS and the running of end-of-service gratuity, if these things can be coupled with the benefit of portability, it would attract attention of a lot of transient migrant workers. Okay, thank you. Now moving on to the in-depth details or the reflections from these countries. As you can see that we have done some normative levelings, calling them low, medium, and high, just to make the point clear that these low, medium, and high rankings are neither judgmental and nor they are some objective ranking, but this is just a template to select priorities in all the countries towards developing migrant financial solutions. The details that or the characteristics that fall into high nature are the ones which are already at a mature level, whereas the ones that fall into medium level or the low level may need some more consolidation and deeper focus. So, like with this thing as a pinch of salt, we now move into the Bangladesh insights. So when it comes to Bangladesh, I would really like to draw the attention on the Ministry of Expat Welfare and Overseas Employment, the Ministry of Expatriate Welfare and Overseas Employment, as well as the efforts of Ministry of Finance in developing and scaling up the migrant insurance and pension in country. The Prabashi Kalyan Bima, the Prabashi Karmi Bima, or the mandatory insurance has showcased how that even without subsidy, a mandatory insurance can be innovated to make it self-sustaining, and also with regular changes, the benefits can also be improved. As a testimony to its success, more than 2.5 million outgoing migrants are now covered through this scheme. However, as a transient thing, With the changing needs, there is always a possibility of improvement in both the insurance and pensions delivery mechanism, as well as process innovation. In case of Pravashi pension, the migrant-focused part of the universal pension scheme, the affordability concerns of migrants must be incorporated, as the pricing appears to be on a higher level vis-a-vis the counterparts living in Bangladesh. Secondly, the rapid growth of Bangladesh in insurance industry did not the innovations did not trickle down, and the concentration of business continues to be with top 5-10 insurance providers. Moreover, innovations in non-life is stifled, since as we've already discussed, the insurers have limited incentive to design new products because of the tariff regulation. Hence, a regulatory clarity and nudge will help the industry to grow together. In addition to the regulatory support, the capacity and skill levels of the insurance companies can also help to improve the inclusive insurance ecosystem in the country. Moving from insurance to the distribution or the digital financial services part, the digital finance and digital remittance have seen tremendous growth in Bangladesh with the advent of mobile financial services, agent banking, and other innovations. These channels can be leveraged to ensure last mile connectivity of migrant insurance and pensions. A regulatory clearance, again, as we speak of regulatory challenges, on bank assurance continues to be a challenge to distribute insurance through these channels, and regulatory clearance on bank assurance can be a great enabler in this innovation. Last point about Bangladesh, the migrant insurance may provide an opportunity for insurers to innovate on the low premium and inclusive insurance product, which so far are not very common in Bangladesh. Leveraging remittance for insurance may benefit insurers in delivering inclusive insurance in a scalable and sustainable manner. We can move to Nepal. Thank you. In case of Nepal, the important trends can be summarized as the existing of mandatory insurance and multiple pension schemes for migrants is an encouraging feature when it comes to Nepal. More importantly, the schemes do exemplify a success of public-private partnerships, where the government mandates the product and schemes, and private insurers and DFS providers implement these schemes. However, as we've seen that there are multiple ministries and regulations allowed, there is a lack of alignment among the ministries governing these schemes, especially when it comes to migrant pension. This again demands harmonization among the ministries, not only to align the priorities, but also to facilitate inclusion of migrants into the existing social security infrastructure. Many of these insurance and pension schemes are still not fully aligned to the needs, process needs of today, especially incorporating the EYC guidelines for subscription, data privacy, and AML guidelines. Talking about the insurance industry in Nepal, the insurance industry in Nepal has also seen a rapid growth. However, a significant gap exists when it comes to the skill and capacity of to develop the inclusive insurance product. The recent guidelines on micro-insurance, setting up of micro-insurance companies is expected to improve this trend, although the high volume, low premium business models still do not exist in a very mature manner in Nepal. And because of tariff regime, as we've seen in case of Bangladesh, the non-life insurers in Nepal have limited incentives for innovation. At the last step, we would like to talk about the ecosystem and digital financial services, the startup ecosystem, and the emerging digital remittance and finance ecosystem of the country provides an opportunity for low-cost, last-mile delivery of migrant social protection products, including insurance and pension. However, based on our study, we found that the industry is still shying away from such innovations due to limited regulatory clarity around digital insurance products, consumer protection, and cross-border operationalization of insurance. So these factors are very important if we want to have a mature migrant financial resilience. With this, I'll wrap up and like to thank you all for your attention. I'll like to hand it over to Mercy.
UAE, you are living UAE.
Oh, my bad. I'm so sorry. I'm so sorry. I'm so sorry. The overall ecosystem of migrant social protection in UAE is improving with the advent of innovative insurance like employment injury, unemployment cover, and a very robust end of service gratuity. In addition to this, the health insurance provision do exist for migrants based out of Abu Dhabi and Dubai. However, most of the migrants do not have an access to second pillar in pension products, which are employee co-contributed or voluntary pensions, which is a pillar 3 product. Although voluntary market-based migrant insurance schemes have been piloted in UAE, not many have become scalable or commercially viable. Moreover, the migrant insurance and pension system in ecosystem has a complex network of regulatory authorities, which at times does risk the regulatory arbitrage also. In talking about the market dynamics, UAE has a very robust and competitive insurance market that has been able to serve its customers in a very efficient manner. However, the market focuses largely on the non-life segment, and the distribution of these products is done through traditional models, missing out on the digital channels. The life insurance segment largely focus on high net worth individuals or high net worth expats, and misses out on the blue collar migrants. So both these trends of using the traditional channel and missing out on the migrants for life insurance are not encouraging for delivering a low premium migrant insurance scheme in the country. Despite the growth of digital banking in the country, the insurers are still slow in adopting digital processes and distribution. Moreover, many of the migrants in Emirates, other than Abu Dhabi and Dubai, are still outside the purview of mandatory health insurance, leading to high out-of-pocket health expenses, which reduces their disposable income. To conclude, the UAE wage protection system can be leveraged to do away with the challenges, and can deliver insurance and possibly pension systems to the migrants of UAE. Thank you so much, and over to you, Mercy.
Thank you so much, Anish and Premises, for that wonderful presentation. Good morning, good afternoon, and good evening to everyone who's managed to join us today. My name is Mercy Washira, and I'll be moderating the panel discussion for today. With me, I'm joined by 3 incredible panelists who we are going to hear from shortly. And we hope that during the course of discussion, you get a lot of insights and information that will add to your understanding on the issues that are being implemented by the different stakeholders to strengthen the financial resilience of migrants in Bangladesh, UAE, and Nepal. And so without further ado, let us meet our panelists for today. So first, we have Mr. Shariful Islam. So Shariful has over 20 years of experience in migration, remittances, reintegration, and anti-trafficking sectors. He is an associate at BRAC, the world's largest NGO, leading the migration program and youth platform. Through rigorous advocacy and evidence, he's working to ensure that the rights of migrant workers and their families are represented from the grassroots to the policy level. Additionally, Mr. Shariful is a renowned journalist in Bangladesh, and he regularly writes for the Daily Star and other media platforms. Welcome to the panel, Mr. Shariful. Next, we have Dr. Luca Pellerano. Luca is a development economist with more than 15 years of experience in social protection reforms. He's currently the Senior Social Protection Specialist for the International Labour Organization in the Arab State. He has provided technical assistance on the design, implementation, and evaluation of contributory and non-contributory social protection systems and programs in the Arab region, Sub-Saharan Africa, Eastern Europe, and Central Asia, covering topics such as institutional coordination, social protection financing, social health, pension reforms, and extension of social security to the informal economy. Prior to joining the ILO, Luca was leading the poverty and social protection team at Oxford Management and a research economist at the Center for Evaluation of Development Policies at the Institute of Fiscal Studies in London. So welcome to the panel, Luca. We are glad to have you. And last but not least, we have Mr. Praveen Regmi, the CEO of IMEPay, a prominent digital payment service providers in Nepal. He is a recognized professional in the field of finance and technology, boasting extensive expertise in banking, digital payments, remittances, and financial system, with a career spanning over 15 years in the industry. So Mr. Regmi has been instrumental in spearheading the evolution of digital banking and payments within Nepal. His visionary leadership at IMEPay has been pivotal in driving innovation and transforming the financial landscape in the region. So welcome to the panel, Praveen. We're glad to have you today. So from the panelist bio, you can already tell that we're going to have an exciting discussion. And before I ask my first question to Shariful, I'd like to remind all our participants to please type in all your questions and comments in the chat box, and we will address this during the Q&A session. So Shariful, from the country assessment, we've seen that in Bangladesh, approximately 4% of the populations are migrants, and therefore migrant insurance and pensions are not only crucial for the financial inclusion and economic well-being of migrants, but they're also pivotal to the country's economic growth. So in your experience working directly with migrants through BRAC migration program, what are some of the key financial challenges that migrants face? And also, given that migration is a gendered experience, are there any specific financial challenges women migrants face that you could also highlight?
Thank you, Mercy, and thank you, UNCDF, for organizing this excellent webinar. Thank you, the other panelists and who are listening. So many of you may know that Bangladesh is one of the top countries from where people migrate. It is the world's sixth largest country from where people migrate. And even from every hour when we're talking, in 1 hour, more than 120 people migrants. And on an average, each year, more than 1 million people migrate. So migration is very much important in terms of overseas employment and remittance, but there are some challenges. But if I discuss from financial point of view, one of the major challenges is the whole recruitment system is dependent on middlemen. Basically, the friends and family, they send the demand and mostly they go to Middle Eastern country. So that's why, as there's a lots of middlemen, so migration cost from Bangladesh is highest in the world. And as the people are not skilled, their earning is lowest in the world. So that means he's spending the highest, but earning is the lowest. On an average, migration cost is 5,000 USD minimum, but their earning is almost 200 to 300 USD in a month. So see, according to our study and even the government study, the amount he spent, the earning, it takes at least 2 years to just bring the cost. So then he stay more. So that's why that he's always a challenge that how much years it takes time to earn the money. For sometimes 15 years, 20 years, he's out of the family. The life is not very good. And when he returns, he sees that there is nothing as a saving. And for the gender perspective, the women are migrants, their number is almost 1 million. Same, they are more vulnerable because they send their money to their family and their husbands and others, sometimes when they return, they see there is no savings. So on that context, I think that the government has initiated the universal pension scheme. It's really a very good idea. It was the current party who are in power. It was their political promise 15 years back that if they will come in power, they'll do this, because normally in a country like Bangladesh, only the government official has the scheme that when they retired, but it was not for the other people. But the government has taken an initiative for everyone. There are 4 categories, and among these 4 categories, there is a separate categories only for the migrants. That means if someone, he has a saving for 10 years, 15 years, or 20 years, he will get a very good amount of money if this returns. I think it's really a very good idea, and it's really very good positive initiative from the government. If they can continue when they send up the money, if they can really saving this, so after 10 years or 15 years, when you will return, the financial resilience was one of our goal of discussion today. It really would be helpful, especially during COVID time. We saw when people started to return back almost empty hand. They were very much anxious about their futures. So I think that on that ground, universal pension scheme and even the pension, which we'll discuss later, I think it's really very good tools in the context of Bangladesh. But there are more improvement area, and I think in that context, UNCDF really can play such discussions and helpful for advocacy and others. So thank you, Eileen.
Yeah, thank you so much for those insights. You've pointed out a high cost in terms of migration and also the involvement of the middlemen, which increases the cost. And on the other hand, the amount of money that they're earning in the destination countries is very minimal compared to the cost that they are facing. So you touched a bit on the universal pension scheme, and that was my next question. So maybe you can explain, because this is one of the key trends that we've seen coming from Bangladesh this year, and it's a collaboration by the Ministry of Expatriate Welfare and Overseas Employment and the Ministry of Finance to develop the universal pension program called the Probashi, and we've seen significant uptake in this with up to more than 2.5 million outgoing migrants being covered by this scheme. So in experience, how will the universal pension scheme launched by the government of Bangladesh impact the financial resilience of migrants in Bangladesh? And maybe you can talk a little bit also on how the scheme is organized, because I know that you touched on the savings and how this can help. So maybe if you can dig deeper into that, I believe the audience will benefit from that.
Now, you have already mentioned, and you also discussed, there are 4 categories of different scheme for this universal pension scheme that called Pragati, Suraksha, Samata, and Probas. Probas, that means people who are in migrants. For them, the government is targeting, and for that category's government has some more scheme that anybody, any migrants, he can save a money 5,000, 7,500, and 10,000 BDT. So if somebody, if I can give example that if somebody migrates at the age of 18, and if he saves 5,000 every month, so he can earn nearly $3,000 in a month. So if somebody is saving 10,000, so the amount is almost 4,000 in USD. So if somebody's savings is 10 years or 15 years, 20 years, 25 years, so it will be different scheme. So anybody, government thought that anybody whose age is 18, he can start this, and until 50 years, they have scope to saving the money, and after 50 years, you will get the benefit. So that's really a good initiative, because normally we see that working with the migrants, many times he is in abroad for 10 years, 15 years, 20 years. When he come in the country, almost empty. The money has been used by his family members, fathers, and most of the times, day to day, in a country like Bangladesh, the remittance is not used productively. They buy houses, they buy lands or day-to-day expenses. So this universal pension really can be a protection when he in older age and when he returns. I think on that ground, this is really a very good example. I don't know that what's happening in the other countries' context, but as my experiences in South Asia, such types of scheme only targeting the migrants, I don't have much knowledge on it. So it's really a very good thing. But the problem is that to inform all of the migrants, most of them are in abroad. So how you inform them? How you sensitize them? Because they don't understand the importance. So it should be easiest way. They're in abroad, how do they save up the money? They cannot come in the country. So automatically the payment systems from Visa card to other, it should be very much easy. So I think that as 10 million migrants are almost in abroad, and every year the another 1 million is adding. So there are more scopes to work on this, more all the banks, the financial institutes and other space. I think it's really a very good areas. Ultimately, the financial resilience So the migrants who are bringing or making the resilience of the country, but they themselves don't have this resilience. So such types of pension scheme, it would be helpful for their resilience. I will stop here just quoting one line. During COVID time, or from government or prime minister said that last 50 years the migrants are giving the country. It's now the time to give them back. So I think that such kind of pension schemes or insurance, it's really a good idea to give them back. So now the question is that to inform them, to bring all of them in such of insurance, to give them then the confidence, I think that really would be helpful.
Thank you so much for those insights. Indeed, I think one of also insight that you were seeing from the country assessment is also in terms of improving efficiency. And you've talked about the sensitization bit, and some affordability concerns are also some of the key aspects to be considered in order to drive the uptake. So I want to come to you, Luca. So as a specialized United Nations agency, the ILO works to promote social justice and internationally recognized human and labor rights. ILO brings together government, employers, and workers to promote decent work worldwide and also to develop labor standards and policies. So in your experience working in the countries of destination and the GCC region, what critical regulatory and policy development are you witnessing in these countries around migrant social protection?
Thank you, Mercy, and thank you for the invitation. It's a pleasure to join the discussion today. And indeed, Mercy, I think you've mentioned, also some other panelists have alluded to it earlier today, the importance of extending social protection to migrant workers is particularly evident in the GCC, where migrant workers comprise between 76 and 95% of the workforce, and also given GCC countries attract a very large share of the global migrant population. Now, until very recently, it has been almost impossible, very hard to table a discussion on extension of social protection to migrant workers in the GCC. The kafala system has reinforced the notion of a social protection as an employer responsibility and not something that should involve national systems. And as much as kafala is the basis of a segmented labor market, it is also a basis of a dual social protection system. With social protection arrangements for migrant workers are often conceived only as with a short-term migration horizon with a focus on immediate work-related risks, and also offering very limited protection as workers move from one country to the other or return home. So this employer liability system, as we call, I mean, the social protection through employers, has proven to work very poorly in a recent past. I think colleagues have referred to that. An upcoming ILO research on Nepali returnees showing, for example, that over the past 2 years, only 4 in 10 workers returning to Nepal had received their end of service indemnity. So with really limited levels of compliance. Also, you know, you have all seen how the World Cup has put in Qatar evidence on the lack of systems for compensation in case of death or employment injury. And interestingly, also employers, especially small and medium-sized employers in the GCC, have started raising concerns about the large cash flow implications of these current social protection obligations, which are surely fully falling on their shoulders, especially during COVID. At the same time, also labor dispute mechanisms have been overburdened. Many cases of workers complaining for non-payment of benefits, which really make stress out the very limited capacity of judicial and labor dispute mechanisms. At the same time, kafala is accelerating. As we know, several countries are engaging in some reforms of kafala. This is also accelerating space for reform in the context also of the structural economic transitions to more value-added and skilled migration models that we have heard also from other speakers. But I just want to highlight that the wind has changed. Over the past 2 years, there has been a number of reforms, important reforms that GCC countries have taken, perhaps in view of these different drivers I spoke about: COVID, kafala reforms, the burden of national administration, and also push from employers. One I want to highlight is big reforms in Oman. I will put some material in the chat for those who want to read more. Big reforms in Oman adopted in July this year, where a whole restructuring of the social protection system brings migrant workers for the first time under the same national systems of insurance as the national Omani workers for employment injury, maternity, paternity, sickness benefits, and creates a new national provident fund to administer the end of service indemnity. Similarly, in the UAE, we have seen, I think colleagues were referring to models to introduce unemployment insurance through private mechanism, as well as recently voluntary private savings to replace end of service. In Bahrain, an unemployment insurance scheme covers, at least on paper, both national and non-national workers. Several other countries are considering reforming end-of-service systems. We know of ongoing efforts in Qatar, in Kuwait, in Saudi Arabia to rethink the whole approach to end-of-service and involve more strongly national institutions in that ecosystem. And finally, I want to mention health. There has been a lot of reform on health insurance systems across the Gulf, including with some risks of bigger segmentation between national systems for national workers and migrant workers. Even regionally, the GCC Bureau has in recent months, together with the ILO, convened a number of workshops and sessions of ministries of labor, workers and employers organizations to really discuss these developments in the region. And I will, again, put in the chat a link to a project document or a set of recent evidence that the ILO and reports that the ILO has produced in collaboration with SDC and ODI on the topic, really showing that there is this new momentum, if you want, for reforms across the region. I want to end, Mercy, by saying not all approaches will translate in progressive realization of workers' rights to adequate, comprehensive, and collectively financed social protection. So there is a wide range of different approaches taken by countries across the region, and it is important to sustain, accompany, but also monitor these policy breakthroughs to ensure that they translate into effective access for migrant workers, including by, I believe, a stronger engagement of countries of origin on this agenda and stronger dialogue between countries of origin and destination on this topic, which is key moving forward. Back to you.
Great. Thank you so much, Luca, for that overview of UAE and also the GCC. It's great to hear that beyond the challenges that we are seeing, some number of reforms are coming up to improve access for migrants, for migrant social protection. And we look forward to also receiving links to some of the reports that you've said you'll share with us. So I want to come to Praveen. And Praveen, so over the last few years in Nepal, we've witnessed a prominent increase in outward migration since 2005. So the overall Nepalese migrant stock, which in 2005 was about 1.2 million, has increased to about 2.6 million, which accounts to nearly 5% increase. So what are some of the crucial challenges impeding the remittance service providers in Nepal from offering migrant insurance and pension products?
Thank you, Mercy, for a wonderful question. The statistics that you mentioned, we don't want to be very proud of that statistic because, we don't want our people to go abroad to, have build their bread and butter over there. But still, that's the reality. We cannot get rid of it. Before we talk about the remittance provider specific problems, we need to understand what are the generic challenges for a migrant worker in terms of insurance and pension. Like my fellow panelists, they said they talked a lot about what their countries are, how their countries are taking care of these essential issues for the migrant. I wanted to highlight what our governments are taking. Most of the things are covered by Anish as well. But we believe insurance and pension services are very crucial for migrant workers and their families because, end of the day, that helps enhance their financial stability when they come back home or even they stay outside. Government agencies in Nepal have taken several steps to ensure that these are well taken care of. For example, there is a Social Security Fund, which is a government entity in Nepal, which has initiated mandatory pension program for Nepali migrant workers, which we believe is a great step toward providing them with a long-term financial security. Similarly, the ministry-driven, Department of Foreign Employment has also made mandatory for all migrant workers to have a term insurance before they leave the country. They need to get this term insurance as an eligibility criteria to apply for approval to go abroad to work there. So this basically ensures their death, disability, and long-term medical expenses are covered in the case of health emergencies, kind of thing. The migrant worker also need to make certain contribution towards the welfare of fellow migrant worker. So as the government initiative, that is one of the government initiative as well. So once this migrant worker do the SSF, participate in the SSF security, the Department of Foreign Employment insurance, and the welfare payment, then only they become eligible to go abroad and work. So this kind of policies has given some sort of resilience for the migrant worker. However, despite of this positive development, there are still challenges in delivering these services effectively to migrant worker. For instance, if a migrant worker encounters a minor incident, the claims, the real pain is into the claim when it comes to insurance. The claim is usually managed by their employer in the foreign land when the small claim comes. However, in more severe cases such as death and disability, the cross-border claim process becomes very tedious and challenging. So the lack of streamlined claim process in a cross-border environment adds a lot of difficulty to the migrant's family, when they want to recoup their the medical expenses, or they want to get the claim of their loved one's insurance due to the death. So there are several government-to-government agreement that happens between when they enter into the foreign employment contract between. I'm talking about the G2G agreements, but they usually there is no common set of standard between the country where they settle the claim for the cross-border incidents. This is one. These are the generic challenges that a migrant worker face in terms of the insurance plan. On the other side, where migrant worker want to purchase the insurance based on their purchasing capacity of the insurance, apart from the mandatory one, they may not be able to purchase insurance for their as a long-term investment or the security plan for them. Despite of the fact that when it comes to the investment product, Nepal has seen a significant awareness at the migrants level, and that is very evident from the that we have seen from the IPO, which is given to as a quota system to the migrant workers. But the process is again not that much healthy. They cannot right away buy any investment product, including the insurance or a pension plan. So from a remittance standpoint, if we talk about, there are few major challenges that we see. We are an innovation company. We have been into the innovation since a long time. From the starting day of the remittance till now, it's when the digital remittance is all across the globe. But these are some of the areas. The pension plan purchase across the border and purchase of the insurance in a cross-border environment. The innovation space is very limited. How we want to deliver thing is, today a company in Nepal, an insurance company in Nepal, launches a product which is very exciting for anyone in Nepal. They just want to download the app. They want to do their KYC, make a payment, and start getting the insurance benefit. But when it comes to the cross-border environment, the KYC is one of the biggest challenge. Then the payment for the insurance in a not interoperable environment is again a challenge. The third one is the awareness of those kind of, building awareness among the people about, this insurance and pension plan is the third challenge. And again, the cohesive regulation to adopt innovation in this environment is a kind of a challenge for a remittance company, because we are a money movers. End of the day, we bring money. I mean, we bring happiness in the form of money. And when it comes to pension plans and the remittance, we are here to move their payment to the insurer or to the pension service provider. But the real challenge is on finding a way whereby they can start the process right away. The intermediary process is so not digital. I mean, that's what I can say so far. I cannot pinpoint to the issues there, but so not digital that it cannot be taken very efficiently, and the trust that is required at the migrant site may not be built very well. So this kind of issue that we see. So to sum it up, I see the limited space of the innovation, the interoperability in the payment side, the spread of awareness about these products, and the cohesive regulation. These are the four things that we see as a bigger challenge. Mercy. Yeah.
Yeah. No, thank you for that summary. And already we can start seeing some things that are cross-cutting from the different markets. Awareness, I remember Shariful mentioning during his session that has been a challenge. You mentioned something to do with trust. And then in terms of cohesiveness of regulation, which is something Luca alluded to briefly. So we can see some of these challenges in the different markets. So briefly, maybe you can tell us, because we know that you have insurance and pension offering that you've been offering migrants in Nepal. So maybe you can tell us how you are addressing some of these challenges with your insurance and pension offering so that you can be able to drive the uptake among the Nepalese migrants.
Sure. I mean, we have taken few projects in hand. We are in a planning stage so far. We are collaborating with the with Citizen Investment Trust, Social Security Fund, and the Department of Foreign Employment to offer a digital pension plan kind of a solution here, built with insurance for the migrant worker. The goal is to bundle these services and offer them digitally through our digital channel, which is a IME Pay app. Thereby transforming how migrant worker can access and manage their insurance and pension coverages. To pilot this innovation, we are partnering with obviously UNCDF on the Migrant Financial Resilience Project. We believe this project has the potential to bring some transformative changes to the lives of migrant worker and more to their families by harnessing the power of digital solution and the innovation around it. End of the day, its ultimate aim is to make it easier for Nepali migrant workers to access insurance and pension product. We want to work on the financial security, especially in the time of need. We, the company who are, which is which is closest to the migrants since last 23 years, we understand our responsibility to secure the financial resilience and the financial future of the migrants. That's why we are entering into this project. So we look forward to support from UNCDF that is under process. Yeah, back to you, Mercy.
Thank you, Praveen. So I'd like to come back to you, Shariful, but let me just remind our audience that we want to hear from you. So please put in your questions and comments in the chat box, and then we are going to address those during the question and answer session. So Shariful, you work directly with the migrants, and also in the program that you currently run at BRAC, you're also able to do some advocacy work at the policy level. So in your experience, what are some of the key policy insights to develop insurance and pension products for migrants based on your experience working directly with the migrants?
Thank you, Mercy. First of all, why we are talking about the financial resilience, insurance, or such contribution for migrants? Because many of the people, they think that they are like ATM machine, they always send money, and government thinks that they are bringing reserve. But the individual migrants, their life is not very happy ending. Most of the time, the way they live in the Middle East countries, the kafala systems or the health condition. If I give you a data, we only know about the World Cup date in Qatar. But if I give an example, in last 20 years, more than 45,000 dead bodies have come from Middle East only in Bangladeshis. So if you contact with Nepali, Indian, the number will be huge. The way they work, anytime they can die. And their age is 25, 28, 30. Each day, every day, 8 to 10 dead bodies come in Dhaka airport, most of them from Gulf countries. We know about Qatar, but the other Middle East countries we normally less discuss. So that's why when they're in accident, or many of them, they lost their jobs within 4 to 5 months, or they don't get the jobs. So they have to return on an average 50 to 60,000 people each year. They return almost empty hand. So to resolve this problem, so the insurance is really, or the universal pension scheme is really a good idea. So the pension scheme, what government has started before COVID, and then after COVID, that anybody who can give 1,000 BDT, that means almost 10 USD, then he will get of insurance that if he died in abroad, then they can get 1 million BDT, that means almost 4,000 to 5,000 USD. So that's a good thing. And the policy issues is that many of the things we take for migrants, but most of the time they are not aware of it. As our Nepali colleagues mentioned, that in country many things is possible, but when they're out of the country, like a country in Saudi, where 2 million migrants are there, or UAE, they are segregated, they are not in one places. So they don't know what's happening. The amount of money they get, 200 or 300 USD in a month, they send. Many of the times they send it through irregular way, that means Hundi or some other way. So, and they don't have any savings. So there are many issues on policy. That first of the insurance, if you see that people in a country like Bangladesh, the normal people or the migrant people are not very much familiar, or they don't take it very easily as an insurance. They think that if somebody happened to me, the insurance payments or settlements, it takes a long time. So that's why it's really challenging. And the insurance, what's happening in Bangladesh totally nowadays is government led. But there are many other financial institutes or private agencies. So how to bring in them all? And most of the time, the banks or other government agencies, they are getting the facilities for the migrants. But if you compare, so what's really we are doing for them, I think we really need to take care of them. The way we take in embassy or in airport or when they return. So most of the time migrants, we have a counselor, psychosocial counselor who deal with the migrants. We listen to them, and almost all migrants say that this is for the first time somebody is listening to me. I am getting some spaces. So that means our duty bearers are others who don't care of them. We take many initiatives in papers, but on implementation, there are lots of obstacles. So many of the times we don't take them as a human being. 10 million migrants, 10 million separate human beings. So we have to take care of them. The happiness doesn't mean the money, what our Nepali colleague is saying, or USD. So we have to take care of them. If we really can take care of them, I think at the end of the day, that would be helpful. So the policy part, I think what we have done better is good, but there are many things to do. What we are thinking to implement, how to make it an easiest way, how it can be easy so that they send the money, what the other banks can really make some products for them, that if you send money in 5 years, you'll get such benefit, especially their kids and other, it can be education, healthcare, many of the things that is much related as they come as a disabled, as they come as the dead, as they lost their jobs. So how we can do something for them? I think on policy ground, all of the things should be, and coordination in each mechanism is very much needed. Different ministries, stakeholder, different policy. So the insurance policy and the universal pension scheme should be together so that ultimately is complement each other. So I think there are many things to do. And I think in such mechanism, instead of the regional mechanism, it could be together. What good practice in Nepal have or India have, we can share each other's, we can take each other's the good way from government to other CSOs or private agencies or bank, that really could be helpful. And I think that today's in 2023, even the kafala systems or the way things like one kind of modern day slavery. So I think that from that ground, we really need to take care of them, respect them all times, not the monetary machines or looking that. So I think that's really important. So I will end here, Mercy. Thank you.
Thank you. Thank you for that overview. And I completely agree with you. For us to design policies that work for the migrants, we need to understand their realities and the challenges that they face, and use these insights to feed into the policy design process. So Luca, I'll come to you now. Based on your experience working with the different constituency, what support do regulators and policymakers need to develop a comprehensive migrant social protection ecosystem?
Thank you, Mercy. I mean, I would say that first and foremost, it's important to have an overarching vision, to orient this agenda, which, as we have just, I think, listened today, involves so many stakeholders and interests in both countries of destination and countries of origin. And in that sense, of course, I mean, coming from the ILO international labor and social security standards do provide, if you want, a global compass, a globally built compass, a globally agreed compass that government and social partners should align with, including with support to international partners and the whole UN system. I just want to mention what is that this kind of international social security standards tell us is the horizon we should aim for. They tell us that eventually migrant workers must benefit from periodical and predictable payments, including in the form of pensions for long-term risks. They say very importantly that social protection systems should be built on the basis of collective financing and broad risk pooling, including with sufficient participation of financing from employers in countries of destination. So standards are very clear in this sense that solidarity is what differentiates social insurance from private insurance. And if we're talking about social protection, there needs to be an element of involvement of collective financing, risk pooling amongst workers, but also between workers and employers as core of the foundation of the system. And third, I think what standard says also that there is an important role for the state, for governments, to ensure that these benefits, these rights are enforceable and are accessible. So the power of the market is there, we recognize it, but the power of the market needs to be framed in a context where the state of countries in origin and destination take responsibility to delivering these rights. So it's not just a matter that can be, let's say, delegated either to sending countries alone or even not to migrant workers alone, as a problem of private savings that they need to sort out for themselves. So what can we derive from this quickly? I mean, first, I think that it's important to continue the focus on reforms of systems and the role of employers and governments in countries of destination. It's part of workers' rights to decent working conditions, to have social protection. It's not just an individual choice. It's part of a broader labor protection agenda. And I think the solutions that in recent years have stemmed somehow come from a sort of an acceptance that nothing can be achieved from employers and governments in countries of destination. Therefore, we need to find, other ways which rely on migrant workers themselves for sending countries. Now, recent developments in the GCC, which I have alluded to, perhaps showed that the agenda of progressive change can be pursued even through reforms in countries of destination. Second, of course, sending countries have an important role to play. They have tended to step in to extend protection. And I think we've heard from the Bangladesh, from the Nepal examples, how these unilateral measures that sending countries put in place to, in a way, cover for the gaps of what should be done in destination countries and is not done. But there, I think it's important that, as opposed to, let's say, minimalistic welfare fund models, preference is given to facilitating migrant workers to participation in national social security systems in countries of origin. This is the case, I think, of the pension in Bangladesh, although it's still voluntary, and also the case of Nepal that was referred to. Here, important that a narrowly defined approach to universal measures can be problematic, especially when these schemes are voluntary, because we know that migrant workers do not tend to participate to the extent we would want in voluntary schemes. And second, when the burden is put only on migrant workers to contribute, with no participation of employers. Because here, really, the lack of coordination between countries of origin and destination can be detrimental to migrant workers who may end up be subject to double contribution. They're forced to contribute in sending in countries of destination, as well as they're subject to unilateral measures in countries of origin. So really the coordination across the migration corridor is critical, as well as working on compliance and knowledge, I think, as Praveen was referring to. Just some figures from recent work in Nepal, the schemes that were referred to from the recent survey we conducted. About half of Nepali returnees are aware of those mandatory insurance scheme, and only less than 10% have claimed. So they play an important role, but much more to be done in terms of awareness, access, and coordination. The third point quickly is the role of private sector and private saving approaches. So these indeed need and can constitute an important complement to national social protection systems. However, we should be considerate in pursuing scenarios that crowd out limited financing from national solidarity-based social protection systems. So at the end of the day, migrant workers' space for savings is limited. Should it be put on private solutions or on national systems? There is a trade-off there, and some deeper conversation to be given that links to trust, accessibility, etc. And private-public partnerships, while they have a potential to be deepened on many aspects discussed today, such as service delivery, administration, the payment management systems, including along corridors, investment management. At the same time, in line with international standards, state institutions should retain key functions of risk pooling, enforcement, and also rights-based regulated access, as opposed to full market decentralization, at least for certain core pillars of the system. Mercy, I just want to send like a last message here, which is it's really important to advance this agenda, and I think Sharif will refer to it, of extending social protection with a broader labor protection agenda. We cannot really think of enhancing financial resilience of migrant workers without advancing their labor rights. I'm talking about issues of ensuring wages are paid, working conditions are adequate, fundamental principles and right at work are respected, and also occupational health and safety standards are observed. So from the ILO, this agenda of extension of social protection to migrant workers really needs to be seen from that, if you want, broader prism of extending a frameworks to advance labor rights and labor protection. Back to you.
Thank you so much, Luca, for that. I've noted the awareness, access, and coordination, both in the sending and in the countries of origin and the countries of destination, and also your perspective on also linking what Shariful and Praveen is saying, what's currently happening in the countries of origin, and giving the perspective on what's currently happening in the countries of destination. So Praveen, I want to quickly come to you. And we've discussed earlier when we talked about the numbers of migrants, outgoing migrants from Nepal, you said that it's nothing to smile about because these are just numbers. So my question to you is, how can remittance service providers be incentivized and encouraged towards public and private partnerships for migrant social protection to improve the financial resilience of migrants and their families?
I just want to, correct on my stand. What I meant by it's just a number and we don't have to be proud about it, because we don't want our people to go outside and work. We want our people to come back to Nepal and be part of the development on a direct basis. Though their involvement, their contribution is around 26% to the entire GDP. So we are very much thankful about what is happening around migrant ecosystem, but something that any country will not be very much proud about. So that's what I wanted to mean. On a public-private partnership side, we're already into it. We believe it's a both side of a coin. One is the incentivize. Yes, we do get incentives directly also. For example, there is a mandatory allocation of IPO towards the migrant mandated by the government. On that front, we take as our responsibility to reach out to the migrant and ask them to invest in the IPO, which is one of the secured investment back in their country. So we take it as a responsibility to aware them to invest in this, the IPO in a public company setup. On the other hand, through this awareness, we also get some business because they send money through our channel. So it's both sides of the coin. Through this kind of initiatives, we believe we will be in a position. We will be in a position to build more trust among the migrant, because we are there to help them bringing their money back and utilize it in their financial resilience project or the financial resilience and security programs. However, there are a few direct incentives that we are looking here, such as, we might be looking towards the technical assistance to build a capacity around innovating product on the financial resilience and resilience side kind of product for the migrants and their family. We would be looking forward to, for building, support in building collaboration for the interoperable payment infrastructure in a cross-border environment, so that any service in Nepal can be purchased or taken on a go by the migrant workers. We want to, the incentives. The one mode of incentives can be grant to increase the reach, onboard the families of the migrant, and incentivize migrants to foster the adoption. And one critical aspect would be to lobby. That is another incentive for the companies like us who are into the innovation, to lobby with the governments and regulator to standardize the insurance procurement, pension plan procurement, and the claim settlement process. So this kind of direct incentives that we mostly look into when we want to get encouraged to enter into the migrant social protection programs. Yeah.
Great. Thank you for that insight. We've noted the TA for capacity building and also collaboration in lobbying with the government. I realize we have 4 minutes left, and we've received a lot of questions in the Q&A chat, which we'll not be able to address at this particular time. But we are going to address all the questions and send them with the webinar recording. So I want to hand it over to Premises, maybe to summarize briefly the questions that we've received, and also for his closing remarks. Thank you, panelists, for all the insights that you've shared. We really benefited from the different experience and also the different perspective that you've shared with us. Thank you.
Thank you, Mercy.
Thank you,
So, over to
Mercy.
you.
Thank you, Mercy. And thanks, Luca, Praveenji, and Shariful. It was really great listening to you and take different aspects. And thanks to all the participants who have raised some very important and pertinent questions. We are running short of time and wanted to value everyone's time, so we will not extend. However, rest assured, as Mercy has mentioned, along with the webinar recording, we will try to answer them to the maximum extent possible. And I think some of the questions have been answered already as the panelists have been deliberating. And what we have heard today is really exciting, because there are different aspects coming up. Especially, we have heard how even when we talk about public-private synergies and social protection for migrants, how some of the basic fundamentals of labor rights and fundamental principles need to be adhered to. And it's encouraging how some the state and the coordination between countries of destination and countries of origin's government need to be kept in focus. Role of employers and affordability, and how the governments can not only not subsidize but also put their weight behind the negotiation power and other aspects of the government's machinery to progress the migrant social protection agenda. Especially, we have heard in the presentation the example of Bangladesh, where it's as a unilateral measure. It's not the Ministry of Expatriate have been very much focused and working tirelessly on the migrant insurance product. However, they're not subsidizing, but they are using other mechanisms to ensure that it's an effective one. But however, we need to keep the affordability constraints of the migrants in mind. And we have also heard that it's encouraging that even in the countries of destination, specifically GCC countries, we are seeing some important developments of late in terms of providing migrant social protection policies, uh, not only in terms of reducing the kafala system restrictions, but also in terms of uh, important reforms in terms of health and other kinds of insurance and pension products. We have heard the importance of migrant financial resilience from both Bangladesh and Nepal. And yeah, Shariful was highlighting that almost 3,000 migrants die every year. Uh, 3,000 migrants from Bangladesh die every year. In case of Nepal, that is about 1,500. So in total, we are looking at 4,500, which means that by the time we have ended this, probably one of the migrants from either Bangladesh or Nepal has passed away. So it's really a very urgent issue. That is, there is no doubt about that. And no matter how we try, we cannot overcome or oversee the fact that migrant insurance and pension is indeed there is a market potential. In case of Bangladesh, there's like migrant pension can bring about 1.5 billion dollars of investment in pensions, which is important for the socio-economic benefit. In case of Nepal, 550 million can be accumulated by pension savings of migrants only. In case of UAE, 2.2 billion. And the vulnerabilities of migrants that can be insured is also billions of dollars. The other important aspects that we have discussed is pension, because in Bangladesh and Nepal, both pensions, in case of Nepal, there are three different migrant pension schemes, and in case of Bangladesh, they are just taking the first step towards migrant pensions in universal pension scheme. However, we have seen the requirement of digital access and digital processes that can be helped in those pension schemes. Even though they are public schemes, the private sector can come in and make digital innovations on those, which is very much necessary. Privacy, safety, security issues, harmonization of identity documents in eKYC that was highlighted, reduced cost of contribution, and also, as Luca was mentioning, the need for coordination between countries of destination and origin, how the continuity of pension happens, even if it's even it's a origin country of origin-based pension. How does that get benefit? How does the migrant get benefit of the country of destination-based pension, and how the harmonization happens? All those aspects need to be covered. And in case of Bangladesh, we are working with the Minister of Expatriate on the insurance and eventually the pension schemes. Also, what is highlighted is, well, the pension scheme for Bangladesh is the migrants is the costliest among the four variants. On average, we've seen the migrants earn about 25,000 taka per month. However, the pension scheme says the minimum contribution is 5,000 taka, which is very high. So we need to do some calibration around. Now we can go on talking about these issues, but because the issues are there, the challenges are there, but we have also discussed about the opportunities. We have also discussed about the possibilities, and also the very fundamental framework within which the public and the private sector has to operate. We again thank everyone for joining, and we wish these dialogues continue so that ultimately both public sector as well as private sector innovate on different kinds of migrant insurance and pension, and eventually other financial products and services that ultimately yield migrant financial resilience. Again, thanks to MSc for their research on these three countries, and eventually we will have three more other countries research coming up. So we'll have another round of webinar in December, hopefully, focusing on three other countries. And these country reports will be available in a couple of months. And thanks to the panelists for joining and giving their valuable insights. And thanks to all the participants who have joined, often late in the evening in case of Bangladesh and Nepal, and patiently heard during like 1.5 hour webinar. We'll be sharing the recording, and thanks to everyone. Have a good day, good evening.
Thank you. Thank you, everybody. Thank you.
Thank you very much.